This is a Stock Trading Reality Podcast, episode 62.
And I think that's the worst place to be in, is not knowing what you don't know and being overconfident in what you do know.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host.
He believes the most powerful tool ever created is an alarm clock. Please explain.
ClayTrader.
Now, if you're having a case of deja vu and thinking, I'm pretty sure I know where this is all headed, you're probably right. Chezz and I have talked about this numerous times within interviews, but I want to bring it up again because it is one of my biggest pet peeves. But an alarm clock is a fantastic tool because it eliminates the excuse of, well, I don't have enough time. Well, believe it or not, 5 a.m. does exist, and it's nice and quiet during that time of the day, and you can get actually a lot done, whether that be prepping for your day of trading, just studying or what have you. There's a lot of time in the day. There is 24 hours, and an alarm clock is a great way to help you utilize your time. So especially with Chezz. Chezz is out on the West Coast. So us East Coast people, us Central Time people, we have it pretty easy. But, I mean, Chezz, right? You, of anybody, probably have no tolerance for the whole, I don't have enough time. I mean, I'm guessing you utilize your alarm clock quite a bit.
Are you telling me that I have to get up before the sun rises? Yes, you do have to get up before the sun rises, and I get up most of the time before the sun rises anyways, because that's just when the market opens, depending on the time of year. So I have absolutely no tolerance for it. It's not, suck it up for a couple days, and it just literally will become as simple as habit. The thing is, you have to decide that you want to do it. That's probably the hardest thing to do in the beginning, but yes, I have absolutely no tolerance for people say that, oh, I don't have enough time, whether it's in the evening or in the morning. You have two choices to do it.
Yeah, and I think we've talked about this many times before. If you're getting into trading because you just want the money, you want to get rich, you want to just the money, you have to have a passion for it. You have to have a passion for the challenge of what this takes, because here in and of itself, especially on the West Coast, I mean, there's one little thing where if you don't have passion, there's no way you're going to be getting up before the sun rises on a routine basis. So, when you hear us talk about passion, maybe you've heard us talk about passion in past interviews, a little minor example right there. Sometimes you just got to get up super early and you got to do it on a very routine basis. So yes, utilize the alarm clock, a great, great tool. So welcome everybody to the show. We have another fantastic interview, but it's been a while since I've kind of given the quick history of the podcast. And a lot of people say, hey, why are you only doing members? Why can't you just expand outside? Well, this was originally intended only for members. It was my original idea that, we'll just keep it within the community. That way we can try to inspire and motivate others. And then some other people chimed in. And, if you open it up, other people could maybe get, just hear the other stories too. And I thought, that's true. I mean, we can all motivate the community, but if we can inspire some other people outside of it too, then that's cool. So that's kind of why we only stick with people that are members of the chat room and the community, because it was always just intended for us. But like I said, we decided to just let it go public, because if we can inspire you as a listener, even if you're not a community member, well, that's cool too. So I like to do that every several podcast episodes, because it is a valid question. What's going on with this? Why is it only members? But that is why. So we have, like I said, a great show. We are talking with member CPO. Is his alias in the chat room. He goes by, or his name is Chris. He goes by CPO, and it is a two-parter. So we're going to have two parts for this one. And it was just, we had one not that long ago with Sean, but sometimes Chezz and I, we get talking to somebody, and it, for whatever reason, it's just flowing very smoothly, and we say, you know what, let's just keep on going, and we won't rush, and we'll just, make it a two-parter. And CPO has all kinds of awesome analogies, from just adrenaline to dancing to shooting to, I mean, Chezz, would you agree he has all sorts of fantastic analogies to summarize very important issues, but in very easy ways to understand?
Yep, and there's a lot of things that kind of have transitioned from his kind of working career life all the way into trading as well, and those analogies are just really, really awesome to hear.
Yeah, it's really a good episode. So, or two episodes, I should say. So without further ado, we'll get started. Well, hey, Chris, I don't know if I'm going to call you Chris or CPO yet. I'm just going to, maybe I'll call you both. Is it okay if I call you CPO?
Yeah, CPO is what most people that know me well call me, but I actually respond to either. So if you get confused and revert back, I will still know who you're talking to.
Excellent. I'm glad we got that figured out right at the get-go. Well, welcome to the show. Thank you for taking some time out of your day.
Hey, happy to be here.
Now, are you going to be on the webinar tonight?
I am actually, yeah. This will be one of the first webinars I actually attend, and the reason is usually I have something going on, but I did some schedule swapping with my wife so that I could be here for the interview. So that frees me up for the rest of the night.
You're going to be hearing my voice quite a bit for the next.
I know, it's making me nervous already.
Yeah, I would be very nervous along with you. So your nervousness is justified. But now a little context to our listeners. Me and Chezz have already met CPO. Actually, we did a Baltimore Meet-and-Greet several months ago now, and Chris showed up, so we actually got to hang out with him. We went to a ball game with him, so this is kind of cool to just kind of reunite. And we talked with him at the burger place, and he's got a fascinating story. So we're like, man, we got to try to get you on. But he also lives a very hectic and busy life, so it's been kind of a challenge to get him here. But here we are, so I'm excited about this. And I guess let's just hop right in. So where did all this start for you, Chris? What got you interested in the markets, and what kind of made you kind of push you over the edge in terms of, you know what, I want to get involved. I want to take some things into my own hands.
So that's an interesting question. And I know this, I know what's coming, right? So I start thinking about my background and how I got interested in trading. And it's really hard for me to pinpoint exactly, when that happened. But I just remember, over the years, probably late teen years, early 20 years. This is, before the stock market was accessible to everyone via the internet, right? I mean, pre-internet trading era. That I remember being interested in the market, but the market was something that only people at Wall Street could deal with. But I would read about the stock prices going up and down in like the Wall Street Journal or other news venues, and I mildly paid attention. And but more importantly, as I was hitting my mid-20s, I'm starting to think about investing for my future. And at the time, I was a cop, so there was no 401k sort of a thing. I could get a pension when I retire, but there wasn't a strategy through my employer to help me sort of invest. And I remember this friend who you always had that sort of Amway sales friend who's always trying to convince you to buy something that they're selling. And I had this friend who was doing some sort of life insurance thing. And to this day, I don't know what it was. But I think I bought some of it. I don't even know. I'd have to figure out if I even have some money invested somewhere that I don't even know about. But, all those little things would pop up over time and just kind of keep me curious about it. And then what really transitioned for me is my current career. I'm in private sector in I don't want to talk too much about what I do, but
I don't want you to have to kill Chezz and I, so please don't cross any lines.
I prefer to stay alive, so just disclose what you can, but we'll be good no matter what.
I'm private sector. Let's just say that I'm no longer in law enforcement from a government perspective, although I do support law enforcement activities from a contracting perspective. So that's what I'll say about that. Anyway, so I'm very fortunate to have a company that has a good plan for investing and retirement and future. So I have a 401k that has been building probably 12 or 13 years now. And I was awarded several times throughout my career with restricted stock units. So I'm getting my own company's stock periodically, for reward for good performance in the workplace. And then I'm watching that vest, and then I'm watching it grow. And then my company matches my 401k. So I've been contributing as much as I can, like the 10% max that I can without receiving too many tax challenges. And I've been watching that 401k grow. The only problem is I've had no control over it. It's like throwing darts at a dartboard for me. I mean, I go in, I log on, I'm like, put some in mid cap, put some in large cap. I don't even know what those things mean. Give me some international.
Sprinkle a little here, sprinkle a little there, and hopefully it goes up, right?
That's right. But the thing is, it did go up. Like, I looked at it a couple years ago, which is where my story really starts. Actually, last year, about this time, almost oddly enough, last year, I was looking at my 401k because they tell you should go looking at it every so often. I looked at it and I'm like, man, I'm like I had a 20% gain on my investment in my 401k. That's pretty good. So it started to make me want to take more control over it and understand where my money was invested, what stocks I was in or what mutual funds. And so I'm starting to think through this a little bit, kind of playing around with those, maybe doing a little research. And then my wife and I have this conversation, and a friend of mine have a conversation, and all these conversations are happening about investing. And my wife says, hey, you know what? We've got some money in a brokerage account for our bank, Wells Fargo, which is an interesting story all to itself. And she's like, I've been thinking about it. It's just been sitting there. Maybe we should try and invest it. And I'm like, sweet, I can do that. So, me and my big brain decide it's time to learn how to invest because I've got this money sitting there waiting for me to play with. The good news about my story is I didn't touch my 401k. That money's still there. I haven't lost any of that money, but I have taken a few nicks in that brokerage account that I originally started with, which I'm sure we'll get into a little bit.
Well, it's definitely good you didn't dive into that 401k stash because that's obviously, to set you up for later in life, and you can't be mucking about with that. But sounds like you've been waiting for years to really take control of this. You find out you got a brokerage account now. I'm assuming that some of these nicks might have happened relatively soon in your relatively new investing life. Is that true?
No, that's the fun part, right? When I first started, I was doing pretty good on my own.
I smell fool's gold.
Yes. So get this, by the way, the brokerage account has 100 free trades per year. So I'm like, free trading.
Better throw the trades on right now.
Web interface.
Throw as many on as you can.
So I immediately went in and I invested. At this point, I don't know what trading is. I just know I'm investing, right? I'm investing in the stock market. So
I want to ask you this though, because I found it. You said, okay, yeah, your wife kind of gives the green light. You're like, I know how to do that, and then you made the comment, okay, I'm gonna go learn how to invest. Define learn how to invest. Was this like buying books on Amazon? Was this YouTube videos? How exactly were you learning how to invest?
At this stage, really, I just did it. I'm kind of an adventurous guy.
Did it? You're just saying you just threw money. You just started putting money to work.
I'm like, you know what? I know Microsoft's a good company. I know Disney is a good company. I went on, and I Google search for them, and when you Google a company, you can see the stock sort of profile there. I'm like, yeah, I don't really know at this point. All I know is I'm thinking long term. Put it in and then watch it increase, just like my 401k does. And so I bought literally. My first two tickers that I bought were Disney and Microsoft, and I bought 50 shares of Microsoft and I bought 20 shares of Disney. That was April of 2015, so almost exactly a year ago.
I'll give you credit for this though. A lot of times, and from past guests, and Chris was telling us beforehand, yeah, he's listened to the podcast. But a lot of people that say, I just jumped in and did it, when they get started. And then I ended up on this message board about penny stocks, and it's like, oh, at least you went with good old fashioned blue chippers, Disney, Microsoft. That makes me feel a little bit better. It's you didn't go down the path of did it being defined as I ended up on Twitter asking people, should I buy this 000 penny stock? But I can't. I don't remember your full journey, so I don't remember if we are going to venture into penny stocks or not. But at least right now, you're doing things that make rational sense in terms of blue chip companies.
I was being cautiously stupid. So I picked
nice.
I picked blue chips because I felt they were less risky in getting started. In Disney, by the way, my wife and I bought my son a Disney one share of actually Pixar back when Steve Jobs was running Pixar, and we still have that one share. They tried to get us to convert it to Disney, and we never did. And we get this $1 a year dividend off of that one share, and it's in my son's name. And so that's kind of why I picked Disney. I'm like, Disney, we've kind of already been dabbling with Disney for 14 years. So what the heck? But yeah, so I was cautiously optimistic about it, but I knew that those two companies were going to be successful because at this point, I don't know anything about trading. I don't know anything about technical analysis. I don't know anything about charts. All I know is, hey, I think the company's going to be successful, and I have Microsoft products, and we go to Disney. So I ended up making like $700 off of those 2 trades. Now I held them
Did that give you visions of grandeur in the sense of maybe you should put more money on the line for more companies you believe in?
Oh, absolutely. Yeah, absolutely. So that's when I decided I wanted to learn more. That's when I went to like the bookstore in the mall and like picked, of the row of books on investing in the future, I found a book on day trading or how to day trade for a living. And I just was like, okay, I'll try this. And I grabbed the book, and I think I read it before I left the mall. I was just kind of reading it as I was walking. And that's when I started really recognizing charts and that there was more to this. And I was still trying to do fundamental analysis, but I was starting to get interested in the science and the patterns and the math around the market. And that's kind of what got me fascinated more than anything is, the fractal nature of the market and how, patterns and Fibonacci sequence and all of these things that kind of hit both my artistic side and my sort of scientific side at the same time. So I just started doing research, and I did like everybody else. I started Googling around, looking for places, and I did stumble on StockTwits, right? StockTwits was where I started drinking Kool-Aid for the first time.
But wait a minute. I mean, I thought that if after reading one book on day trading, you wouldn't need StockTwits or anything. I think you'd be just immediately successful. You'd become rich. You wouldn't have to work anymore. Are you telling me that did not happen after reading that book?
It almost worked like that.
Almost. Okay.
Yeah,
well, there's a catch somewhere. Yeah.
Yeah, almost. No, I went into like information sourcing mode, right? So I'm just trying to find everything I can to learn more. At this point, I'm still early in. I'm still thinking more longer term, but the day trade sounds fascinating to me. But I'm not thinking about, doing it for a living or a career or anything like that. I'm literally So the bad thing about how I got started is this lump sum of money sitting in our brokerage account is kind of like monopoly money to me, because I didn't even know it existed until my wife said something about it. So the fact that I get to play with it and, basically blow it gambling on the market, it didn't have very much impact to me. And that was a bad way to get started. So what you're going to hear probably from me is all the things you shouldn't do when you start trading in the market, because my story is definitely not over. I have a long ways to go to be what I would consider a successful trader, but I am taking some knocks along the way, and all of these are great learning opportunities for me. But yeah, I didn't do it probably textbook.
Well, welcome to the club. I know very few. Let's see, we're in the 60s now in terms of episodes. We've had maybe 2 or 3 people actually go through the proper steps from the get-go to do it. So, and I mean, hey man, I thought I was going to get rich on mufflers, so it doesn't really get any worse. Doesn't get any worse than that. You made a comment. You went to StockTwits, and that's where you started to drink the Kool-Aid. Let's talk. What was this Kool-Aid? What exactly was happening? From the StockTwits perspective, which apparently I'm assuming kind of led you down the wrong path.
Well, so StockTwits, what it did is got me looking at what people were talking about. They had like the trending ticker symbols, and people start talking about this one, I'm bullish all the way on this, and I'm bearish, and I'm still trying to learn what bullish and bearish even means. But I'm starting to get into that risky area of wanting to puppet trade, and whatever anybody else is hyping, I think must be good, because otherwise they wouldn't be hyping it. So I never really got into penny stocks. But I did buy into other people's hype. So I started day trading, still with this Wells Fargo online web forum brokerage account. It's not designed for trading by any means. But I would try and do a day trip. My first day trip or round trip day trade was Microsoft, actually, because I felt safe. I figured if I screw something up, then I'll just keep it. I'll just hold it, because I was already investing in Microsoft anyway. But then I made a little bit of money there, and then I tried Apple, I tried Netflix, then I got into VLTC, and AKS, and then I was getting into the biotechs because that's what I was getting out of StockTwits was all the biotechs were trending.
To be fair, Chris sounds like his threshold or desire for volatility has gone from, a nice little mover like Microsoft, which maybe moves 50 cents in a day, to biotechs, which have moved $50 in a day before. So I think his volatility-seeking nature is kind of coming out here.
Dude, I was a cop. I was on the SWAT team. I just, I like a little bit of adrenaline. Unfortunately, in the market, that little bit of adrenaline sometimes costs me money.
Well, which that is, you seek adrenaline, and then you said you had quote unquote play money, where you had really no emotional ties to it. Yeah, that's about as worse of a combination as possible. An adrenaline seeker with money that's like, it is what it is. So a lack of emotional, touch to it, like you already alluded to, man, that's a terrible combination. But you said you tried Netflix, you tried Apple. So, were you still buying Apple because, okay, I know what Apple is? Or were you trying to start to use charts? Were you using anything from those books you had, or that book you had read? Or was this just, how exactly did you know when to sell? Maybe that's a better way to, how did you know when to sell? Because, at this point, it sounds like you're just totally making it up as you go.
I am, but yeah, so I am starting to look at charts. I'm starting to understand chart patterns. A little bit about, the usual, the big hitters, which now my chart vision is much better than it was. Back then, I wasn't even seeing the patterns the way I see them today. But I was starting to look at, how the charts would have lows and highs, and, when it pivots off of the low, then the chances are it's going to go up as opposed to down, and, the ascending triangles and the descending triangles, and just little basic things like that. And I was trying to build a day trading strategy off of that, and it didn't take me very long. Just a few, probably about a week, less than a week of day trading on Wells Fargo, when I learned about the day trading rule, which I didn't know about before then, and they completely shut me down. They're like, you can't. Not only could I not open any positions, they wouldn't let me close any positions either without contacting them and paying $25 brokerage fee for them to close it for me. So, I'm arguing. I'm like, what? So I'd research day trading rule, and I'm like, well, if it's the account I have should be, and I'm calling I'm calling Wells Fargo, and they're arguing with me back. So anyway, so I can't trade with them, even though I have 100 free trades a year still, and I still have money in that brokerage account. I can't really trade with them anymore because I'm flagged as a pattern day trader. And I don't have, I don't have enough equity in there.
So I think the lesson here for listeners is, if you're on your broker search and you want to be an active day trader, why don't you just go ahead and cross off Wells Fargo? It doesn't sound like that's going to be a wise choice to go into. So
not trader friendly.
Yeah, that's crazy. So you're just making it up as you go, as you've admitted. But it sounds like, you're trying this, you're trying that, and it sounds like for the most part you're having winning trades. Or is that still kind of the theme right now? Are we still in that fool's gold area?
Yeah, we're still fool's gold. I'm not making a killing by any means, but I'm not necessarily losing money at this point. And then so actually I'm up with Wells Fargo. I think for my Wells Fargo, all of those trades, the Microsoft, the the Disney I first started with. I tried the Etsy IPO, and I made a little bit of money off of that. And then I did a little bit of day trading. I think I ended up like $600 in gains through that period of time, which was maybe less than a month.
All right. So what I want to know is, because this is where most people generally take a turn down a dark path that leads to very, very bad things happening, especially for trading, is what are the size of your losses now? Or how, I know the money feels like monopoly money because you kind of didn't know it was there and you never kind of had any attachment. It won't change your life if, you lose it, or obviously if you make a ton of money, it could change your life. But what are the kind of size of losses you're taking? And, what is the criteria to say that you were wrong? Do you have these levels kind of set in advance from what you read or what you kind of read online? Or are you just kind of, it doesn't feel right and you close the position?
At this stage, I think I'm mostly so remember, most of them are winners, but I didn't have a strategy. I didn't have an RVR trading plan where I knew exactly what I was willing to risk, and I knew exactly what my target was, and I knew exactly where my entry was. I would basically just get in and then hope it went. At this point, by the way, I didn't know anything about shorting. So all I thought was you buy and it low and you sell high. I didn't know there was the other way to do it. So I'm buying everything, just hoping it goes up. And then I basically got out of them by panic selling. Anytime the candlestick, turned around like even a penny, I would just like think, oh, it's going back down, and I would sell it. So I basically was scalping without knowing what I was doing. But
it sounds like you were keeping your losses pretty small then. If you're just freaking out right away if it didn't go your way, it sounds like your losses were pretty small.
Yeah, there I was pretty small. So after Wells Fargo kicked me out, then I opened up a TD Ameritrade account. Okay. And that's where things got all fun because.
All right, there I was going to say is we're still in the fool's gold stage, but we're kind of in like a CPO bubble right now. But let's move to where the bubble finally pops and where you realize, the pop, I don't know what I'm doing. So let's talk about the CPO bubble pop.
So the CPO bubble pop, Clay, is your fault.
Excellent. I must have done a video chart on your stocks and they all fell down. Or
actually, what's that's how I found you. I think I don't know if it was VLTC or ENZN or one of those biotechs at the time that you did, but that's how I found you to begin with. But that's not why it popped. But I did join the inner circle right during this time because I'm searching for information. I liked your videos and I'm like, you know what? I think if I can go into a place where I can get alerts, I could probably do like some amazing stuff here. So I joined Inner Circle, and then the next day I bought robotic trading. I mean, I'm like, I'm ready. I'm going to start investing. And then I got really stupid because I had no idea what the alerts were for. I didn't realize at the time that, many people were playing maybe a short strategy. At this time, I only knew about long strategies. So I was being an idiot, a total idiot. I would go into the chat room and somebody'd say, hey, so-and-so, whatever. And then I'd be like, sweet. And I'd go in and buy it. And then I'd lose money. I'm like, what the heck, man?
I want to send a big shout out to DT right away before we go further, because DT has a disclaimer now for all new members, and it's probably for this reason. I'm sure Chris would have appreciated if this warning had existed at this point. It says, please do not trade the alerts until you've kind of know what you're doing first. Just don't blindly trade them. And it sounds like that's what you'd kind of done there. So yeah, somebody might have been sending out something that might looks really appealing for a short, and then you got Chris over here going long. So
yeah.
Ouch.
I mean, I'd look at the chart and it would kind of make sense to me, but I still didn't know what I was doing, and I didn't understand the different strategies. I didn't understand RVR, and I tried asking questions. And actually, I'll be frank here. I almost quit the inner circle and walked away from the whole ClayTrader scene. I was very frustrated. I didn't understand the responses I was getting. I would go in and be like, Clay would put a, dead bodies, alert. And I'm like, what are dead bodies? And then the response is like, well, go take the training. And I'm like, I was upset because I felt like I paid $100. I should get all of the information from everybody in that room, and everybody should teach me how to trade. And I just didn't get why that didn't work.
So is it safe to say, and props to you for I like that. For $100, you expected everybody to tell you everything, even though other people had paid a lot more than $100. So is it safe to say that you were kind of I'm not saying intentionally, but were you maybe trying to do a little bit of freeloading?
Oh, well,
low price loading.
I was trying to freeload. I didn't know what's freeload. What I thought was, I buy $100, I get into the inner circle, I learn how to trade. You guys give me alerts, I buy and I win. And so when I started asking questions, and I'm asking stupid questions because I don't know what I'm doing, the responses are, well, did you take, robotic trading? Did you take this? Did you take that? And so.
Well, suffice to say, you thought we were a bunch of jerks. I mean,
I thought you were a total jerk. I didn't like you at all. Actually, you pissed me off the first week. I told you I was going to quit. I was going to quit because I didn't understand.
This reminds me of Tony from San Antonio, who was also in Baltimore. Remember his podcast, Chezz? He had the same thing. He showed up. He was like, "What you guys are a bunch of jerks.
You guys suck."
Yeah. So this is okay. So this is good. I'm pissing you off. Let's keep going with this. So I mean, what's next? You're about to quit. So this is getting real good.
You're pissing me off. Yes. I mean, I was angry. I was really angry. And then I'm like, I've already paid the $100. I'm going to try. and learn more. I did get, like I said, I got robotic trading right away. And I felt like that was helpful, but I still didn't know what I didn't know. So I'd look at like a pattern, and then I'd be like, oh yeah, I know this. I've seen this pattern before. And oh yeah, I know this, and I don't really need to know about this indicator anymore. And I think that's the worst place to be in, is not knowing what you don't know and being overconfident in what you do know. So
great quote. Great quote.
I was really having a problem with accepting new information, and yet at the same time being pissed that people wouldn't answer my questions. So I was kind of in this weird spot. And I wasn't really mad at anybody, but I felt like, why did I spend my money here? Such a waste of time. But I kept with it. I started losing money left and right. I mean, literally, PMDB or PBMD, biotech. I lost $3,000 on that one ticker in May. I lost, $900 on PTBI, same time frame. Then Netflix, I'd gained like $3,500, but I was throwing a lot of shares at trades. I had no concept of risk versus reward. I had no concept of risk management. I was just like, literally, I was just gambling. I could have walked to Vegas and started playing the slots. It would have been the same result. I had no idea what I was doing. I was literally just, praying and hoping that the thing went the direction up at this time that I wanted it to go. And then things started to turn around a little bit when, to be honest with you, I started slowing down and paying more attention. And I started
amazing how that works. Things started to get a little bit better when you slowed down and paid attention. What a coincidence. It's shocking.
It's crazy. I tell you, I have a lot of lessons learned. And then it was, I don't know what time of year it was, late July, the end of July, you had the meet and greet, the first meet and greet in Baltimore.
At this point in time, I'm glad you didn't punch me in my face when you met me in person. So I'm relieved. So
it's okay, Clay. In my contract, it says that I have to be your personal bodyguard for all events. So I was there. I've been training. It's for a time like that if Chris were to come at you. But
that's true. Chezz was prepared to take the punch. I remember. But I mean, anyway. Okay. So I was wondering. So where does the whole meet and greet fit into this? But it looks like we're about to get to that right now. So proceed onward. This is good.
The best thing that could have ever happened to me was the meet and greet being in Baltimore. Because were it not right here where I could just literally take a day off from work and drive out there and tag it with you guys, I would have not done it. Number one, I didn't fully understand the whole community. I didn't understand. I wasn't in CTU, and the only thing I knew about people were they didn't like answering the questions in the chat room, and I was still losing money. I'm still losing money because I'm trying to figure out. I'm trying, like you've talked to other people in the podcast before that talked about trying to reverse engineer the alerts. I was trying to reverse engineering them with the downside is, again, I didn't understand short selling. I didn't understand. So I'm trying. I've got a small piece of information that's given to me in the alert and a very small foundation from which to understand it. And I'm trying to make it work, and it's just not working. Although sometimes it would be successful, and that's what kind of keeps me going, right? Is, every once in a while, even a blind squirrel gets a nut, right? I mean, so I was basically just getting lucky enough that I felt like I still had a potential for being successful. But then you did the meet and greet, and I'm like, oh, it's so close. I should just go tag up, meet these guys. Maybe I can learn from them.
Maybe I can punch one of them in the face if I want.
Maybe if Clay gets within arm's reach, I can choke him out. So and that was the best thing that I ever had. Number one, just meeting you guys in person gives me a personality behind the written content or the videos, which are you've got a certain amount of personality in the videos, don't get me wrong, but it's one thing to see somebody lecture to you. It's another thing to sit down and just have a chat with them.
So it wasn't a turnoff when he pulled up in a limousine that was, dropped by a helicopter and, came out with these Prada sunglasses. That wasn't a turnoff or anything for you?
Alligator skin boots.
I mean, it sold me. That's it. That's exactly what did it for me. It was the awesome hamburgers, actually, that did it.
They were good hamburgers.
They were good.
But I hung out and got to talk. Chezz, I remember talking to you at the baseball game about and I really there's some more to this story that I probably should give you some more context in the fact that I had already tried learning / puppet trading from somebody else for free. And I don't know if you want me to say it or not. It rhymes with hasty fade.
Yep, got it.
These guys were affiliated with TD Ameritrade, so that's who my broker was. They were given all this free information, and literally I was puppet trading options at this point, losing almost every options trade because I didn't understand how to get out of them. I was getting into them for what I thought were the right reasons because they were telling me why they were getting into them, and I thought, hey, that makes sense to me. Those are good reasons. But I had no concept of how to get out of an options trade. So if it turned on me, I didn't know what to do. Do I let it expire? How do I manage risk? And I was doing complicated like spreads, and I would sell off the winning spread and just let the losing spread run because I didn't know what to do with it. I mean, it was ridiculous. And that's where I was.
As an options trader, Chezz, you would probably agree with that. That's just as pure. That's just not good, right?
No, that's not good at all because that's don't get me wrong, there's a high probability that you can make money on these trades, but the thing is that if it goes wrong, you can lose much more than you had anticipated to make. Therefore, being defensive and knowing, defensive strategies is an extremely key thing for advanced options, probably one of the most important things.
Yeah, amen to that. And to this day, you guys have probably seen it in the chat room. I'm still scared of options right now. It's like I put my hand on the stove and it was hot and I got burned really bad, and now I'm having a hard time touching the stove again. I'm getting better. I'm getting closer a bit, but now I'm taking it slower. I'm learning a lot more, so that when I do take an options trade, and I've done a few over the last couple of weeks that have been successful. I haven't had a bad one yet, but I've been really careful, really conscious of my RVR situation. But yeah, I got burned bad because it exponentially goes into the toilet, as opposed to at least a stock ticker. If you're just trading straight shares, you can see the dollars tick down and then you can just sell it. It wasn't quite so easy with options, and I was getting really confused with them. But I visited with you, Chezz, about a little bit about options, and you had mentioned that you guys were just coming out or getting ready to come out. I don't think you came out with it yet. The advanced options strategies. You mentioned obviously simplified options, and I'm like, I should just do this. I am literally losing more money in a trade than it would cost me to join CTU and get an education.
That's what you meant by I should just do this. It was just CTU. And the reason why I was talking to you about it, and just, I didn't say get CTU. I just said the amount of stuff you want to go through, it's almost more, it's almost smarter to just get the entire package than to kind of buy them individually because you'll have, everything at your fingertips. But yeah, that's what I just wanted to clarify for the listeners.
Yeah. And so I did that. I did the math, right? I'm like, I could get the individual courses, but then, all the course content is cheaper than buying individually, but I finally just made it. I literally pulled the money out of my TD Ameritrade brokerage account. I pulled that money out and sent it to Clay for CTU. And I'm like, I'm going to lose it. I may as well get something out of it. So
I like this. We're going from almost wanted to choke me out to now you're fully on board. So
I was, yeah. And maybe it's just me. Maybe meeting you made all the difference. Maybe coming to my own realization that I'm going nowhere unless I change my plans or my course of action. So investing in CTU was what seemed like the right move for me if I wanted to be successful. And I hate to be unsuccessful at things, so I'm fairly motivated to try and figure out how to become successful, even if I take a lot of stupid wrong turns along the way. But one thing I will say, while we're on the topic of CTU, the course content is great, but that is just a small part of what I get out of CTU. And I don't think you guys actually advertise this enough. But I bought in for the courses, but the rest of the CTU offerings, the webinars, and I've never made a live webinar just because of my scheduling. But I learned so much from them, from walking through real time or simulated trades and getting everybody to talk about where would you be in, where would you be out, how would you run this, what's your strategy, and just seeing people do. I learned so much more by watching people do it real time. The course content's good, but I need like practical application sort of stuff. And so in the stuff that you get outside of the courses in CTU is really where I find the most value. Probably, as much or maybe even somewhat more than the course content. So you guys really have something great there. And it was, here I am a year after I started trading, and probably 6 to 8 months after I bought CTU, and it was the best decision I could have ever made.
Now I kind of want to go back just a minute. You made this comment earlier, but it was, in my mind, it's just a total transformation. So you said you made a couple options trades recently, even though you're still a little scared, but you've made a couple recently that were, they worked out well. But then you said, but I'm very picky. I took it very slow. You basically implied that you approached it like some old little man, like that's crossing the street, taking your time and doing. But earlier you were saying, you know what? I was in the SWAT team. I'm an adrenaline junkie. But what you described of what you're doing right now for those options trades is like the total opposite of a thrill-seeking adrenaline junkie. So you kind of see that in yourself, that you're totally now like almost trying to avoid adrenaline at all costs because that probably means you're rushing into things?
As it pertains to trading, yes. So I'm only willing to spend so much money failing. And that first year I lost $10,000, and I'm like, if I'm just going to throw away $10,000, I can find better things to do with it than sitting in front of a computer for a few hours a day. It really was just a turning point. It's like I've got to stop and get my, I've got to get more of a positive equity curve instead of a negative. And what I realized is, I was trying to rush into the market because I thought the market was gonna leave me behind if I didn't jump on it. Those big moves that were happening at the time, if I didn't jump in right now and take advantage of it, they were going to be gone and I would miss it. And what I realize now is there's a big move every day around the corner, depending on where you're at in the market. And
say that again. There's a what every day?
There's a big move somewhere every day, somewhere in the market.
So it's almost like he realized that, that, and it's especially common in new traders, certainly, the fact that fear of missing out is so overwhelming, it'll just force you to jump into awful trades in the worst position, generally where people are taking the other side because they're going to take advantage of those new traders. So it sounds like you kind of came to the realization of that and realized that the market will be there tomorrow. Even if, you miss the one big move today, there's probably going to be another one the next day.
That is true. And you know what? I often lose sleep after I have a really bad trade where I force a bad trade, but very rarely do I lose sleep for missing a good trade. I mean, it's like you kind of said it, Clay. I'm like 180 from where I started with this journey because I thought I had it all figured out. Who the heck am I? There are billions of dollars wrapped up in the stock market and all these major companies and these market makers and these, billions of dollars. And who am I to think that I can come in here on day one and just win at the market? Like I'm going to outsmart them all because I got a book at Barnes and Noble in the mall.
There's another quote right there. Nailed it.
Yeah, that's great. But I want to chime in here on, since we got a little interesting and just when Chris realized, there's going to be a big move the next day as a trader, and whether you're new or old, and maybe I'm lecturing to myself for a little bit, but if you're sitting there and you say, oh crap, I missed the big, I missed it. Realize right now that psychologically speaking, you're at a very delicate spot because the voices in your mind are going to be like, you just missed that move, dude. What are you doing? Okay, let's just get oh yeah, there's going to be a big move here. And all of a sudden you're going to start imagining things. You're going to start seeing things that don't exist. So the best thing you can do is just almost at times walk away, because it can be very frustrating to come with an idea and then miss it. And then it's a huge move that you missed. Just know that your mind at that exact point in time is very fickle, and the voices are going to come out and they're not going to straight up say, well, Clay, I am now trying to trick you. So I'm going to try to trick. No, they're not going to be obvious about it, but they're going to try to push you into bad trades because you missed out on something that was just, wow, that would have been awesome. So, I mean, Chezz, both. I mean, have you guys heard these voices before, or is this just me imagining this? Or is
you
this
start to manufacture opportunities because you just missed a big one. You haven't actually lost any money, but you missed it. You lost money by not being on that boat, and therefore you need to make that back. It's almost like you did lose, but it was an opportunity cost. And yeah, your mind will play so many tricks on you. Chris, would you agree?
Oh, absolutely. And I would actually find myself also chasing. Now I know how not to chase. Thanks to you, Clay. But I'd be like, oh, I missed it. Well, it's okay. I'll jump on there. And it's like, like you talk about catching falling knives. I would get into the trade way too late. And then there's the pullback, and then I panic sell and I just lost money. And then I revenge trade
probably goes
to get
in
it back.
Yeah, that's exactly it. Well said. Exactly. That little fickle time that I'm talking about, it's going to lead you to chase. So yeah, exactly. That's perfectly said. So yeah, definitely an interesting discussion here. But so actually, where do you stand like right now? What are you trading? I know you mentioned you've done a couple options, but what exactly are you focused on right now? At the time of this interview, where is your main kind of hard work and dedication being directed at?
So mainly two areas right now. One is,
and that is going to do it for part number 1. Like I said at the beginning of the episode, there was going to be a cliffhanger. So you can't get mad at Chezz and I. We did give you fair warning. But if you want to hear the rest of CPO's journey, then come back next week for episode 63, and you can just get the rest of the story. And it's there's more good stuff to come. I'll just leave it at that. For those of you listening on our website, I'd like to make a quick couple requests. First, if you'd click that share button, leave us comments. We do read those. If you're listening on iTunes or any of the other podcast players, be sure to subscribe and leave us ratings. Little things like that not only help us get our name out there, which we really appreciate it, but it just gives us good feedback on what sort of things you're liking, what you're finding helpful, and all of that. So please take advantage of that and take a few moments out of your day if you are enjoying this, because we really do appreciate it. So we will see you back for part number 2 in episode 63.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the ClayTrader community, including the trading team, premium training, and more, visit ClayTrader.com.